So the market is really interesting right now. We are starting to see some national reports of some slowdown in the housing market. Now, I'm not sure how much of that is related to actual slowing versus the lack of inventory on the market, which ultimately just leads to less opportunities for interested buyers to purchase. But certainly, as prices continue to rise at a fast pace, interest rates remain relatively stable, there is going to start to be some limitation on how much home buyers can afford. We're definitely starting to see a bit of a slowdown, at least nationally, in new home sales, and as well as in some states for existing home sales as well. Now, I don't think we're seeing any of that necessarily in the local market here in Los Angeles or in the South Bay, but just the same, we are seeing some potential initial indicators of a potential slowdown to some extent in the real estate market. Other news and things that have changed since the last market update. Of course, as many of you know, the eviction moratorium got extended. Again, a higher court actually ruled against it. And of course, the current executive administration decided to institute another moratorium. And so that again is getting kicked down the road for at least a couple months. There's just an endless supply of government support right now for renters, for people that are not able to make their mortgage. In fact, I read somewhere else that the government is going to start paying up to 25% of people's mortgages who were in forbearance, who are having trouble making those payments going forward. And I'd imagine we're going to see a continuance and also an acceleration, an increase in the kinds of ways that government tries to step in and ultimately manipulate or control or prevent the housing market from coming down, so that way it continues to rise into the future. Will they be successful? That's going to be interesting to see. I think one of the big things on the horizon is there is some pressure starting to mount against the Fed and their policies because of the obvious inflation we're experiencing in the economy that previously was really seen more in housing prices and financial assets. Of course, now it's hitting all the things that typical consumers need to buy, and it looks like it's getting fairly out of control. So as this pressure mounts, we're starting to see whispers that maybe at some point in the future, the Fed may taper, maybe they'll raise rates a little bit. I'm not very confident that that's going to ever happen, but if it ever did happen, that would certainly affect the housing market. So let's go ahead and take a look at the actual graphs and see what's happening first in Los Angeles County as a whole, and then we'll take a look in the South Bay beach cities just to compare and contrast. All right, so getting started here, we'll take a look at Los Angeles County as a whole, and what we see is prices are still up 17.7% year over year, so still very extreme growth. A slight tapering off finally after month after month after month of absolute sustained massive median home price growth. So we saw a little dip, little tapering off. Of course, we're still vastly up compared to where we were a year ago, but interesting to finally see some let up to some extent in that acceleration and growth in home prices. Now, if we look at inventory, we see the opposite. We're down 37.5% compared to a year ago. So as I've talked about on previous market update videos, the inventory, the supply is just absolutely dismal. When we look at the chart here, I mean, pretty much any time in the past 5 years, regardless of if it was during the holidays, December, we have not had inventory anywhere close to this low. And I mean, we're in the middle of peak selling season. So clearly there's a lot of sellers that are just not putting their homes on the market, probably because they're unsure of what the next steps are going to be, where they would go, what the process is going to be to find and get into another home, so on and so forth. So we're definitely seeing very, very muted inventory, even compared to what we typically expect, which is already very low inventory in Los Angeles County. If we move on to closed sales, we see we are up 16.3%, which partially explains why that inventory is so low. We're still in a very competitive seller's market, So properties that are priced well, that are marketed well, are going very quickly, still multiple offers, and there's still more buyers out there than there are, of course, sellers that are willing to sell, which is why we still see prices rising the way that they are. Now, if we look at the South Bay beach cities and take a look at that, we actually see a bigger dip and less growth year over year now all of a sudden in median home prices. We're up 5.3% compared to a year ago, and kind of a noticeable downtrend, at least for 1 month there. Obviously, we'll have to see what happens over the next several months, see if this is something that's going to pick up, or is this just a one-off, for a monthly number. But in any case, we're still up. Chart still looks super strong, just like the Los Angeles County as a whole. And if we look at the supply of inventory, same trend as we're seeing in the county of Los Angeles. We're here down 40% at just 1.6 months supply, which, as you all know, is essentially nothing, virtually nothing. It's slim pickings out there for buyers, that is for sure. Again, looks like we had similarly low inventory December 2017, middle of the holidays. And of course, we're in the middle of the year here, and we have the same sort of inventory that we had during the holiday season 4 years ago. Now, if we look at closed sales, very similar to Los Angeles County, we are up 21%. Last year was somewhat of a slow year in total closed sales. So strong sales out there in the market. I mean, properties are moving. People are still looking to buy. Market's still very strong in this area. But again, there's just not much out there. And whatever is getting listed, of course, is getting taken off the market relatively quickly. So it'll be interesting to watch what happens in these next few months. I think things could get certainly more mixed up than we've been seeing over the last couple of years, especially if things change with the Fed's stance on inflation and whether or not they're maybe going to taper at some point, raise interest rates or not. So we'll have to keep a close eye on that. I hope this information is useful. If you haven't already, click the subscribe button. Leave some comments down below. Let me know what you're seeing in your local area. Let me know what you think is going to happen. And as always, appreciate you guys watching, and I'll see you on the next video. Take care.